Hello, my name is Brian Mattox. I'm the Senior Portfolio Manager here at Kendall Capital. Today I'd like to talk about some of the similarities and differences between mutual funds and ETFs, or exchange traded funds. Really the major similarity is they're both pooled vehicles, so they both pool all the capital and then issue shares to underlying investors. So you can buy a share of a mutual fund or you can buy a share of the ETF, and that's really the major similarity. The differences are somewhat numerous. The major one is the uses and how they're used. Mutual funds are used more of an active format where you have a manager buying and selling, making decisions for the investor. ETFs are just tracking the index. So if you want passive exposure, you want the performance of the index, just buy an ETF and you'll be able to duplicate that exposure of the index. The next major difference is cost. Mutual funds having an active format where you have a manager buying and selling, they're going to charge a fee. So the fee is a lot higher with mutual funds. ETFs, since they're just tracking an index, are much less expensive than mutual funds. The next major difference is trading. Mutual fund trades, they're executed after market close. So if you want to buy a mutual fund, you put an order in throughout the day. That actually will not be executed to the end of the day or after market closed when the mutual fund calculates its net asset value. ETFs, on the other hand, can be traded intraday, whenever. If you want to buy and sell a mutual fund, or an ETF throughout the day, you can do so. So that's another major difference. The last major difference is taxes. Since mutual funds are actively managed, they declare capital gains, and those are typically declared at the end of the year. So the investors are going to have to pay taxes on those gains. ETFs, again, since we're just tracking an index, there's not a lot of taxes being generated, so they're much more tax efficient than mutual funds. So in summary, we've kind of go over the major similarities and differences. Really the major similarity, they're both pooled vehicles, issuing shares for underlying investors. The differences are obviously the uses. Mutual funds are actively managed, ETFs are just tracking indexes. The cost, the trading, and then also taxes. Thank you, I hope you found this useful.